Let's start with something most traders misunderstand. Odsteum, some debanter understand. Support zones aren't magic. They're not generated by wishful thinking. They form because institutional capital repeatedly enters the market at the same price level. CI at 0.1122 isn't random. It's the price where enough institutional buyers have shown up consistently that whenever price drops to that level, it bounces. That pattern repeats until it doesn't. Here's the thing. Support zones eventually fail. That's their job. They hold until enough selling pressure breaks through, then price discovers lower levels. But that's not what's happening with SEI right now. Right now, the bounce is intact. But understanding support requires understanding something else. The bounce itself isn't the move. The bounce is just the setup for the move. Think of it like a spring. The more times you press the spring down to the same level, the more energy it builds. Eventually, when you release it, it explodes upward with force. SEI's bounced from 0.1122 multiple times. The spring is compressed. The question isn't whether it'll bounce, it's whether it'll break through resistance when it does. And that's where the 20-day moving average comes in. The moving average isn't just a line on a chart, it's the record of what happened over the last 3 weeks. Every trade, every institutional position, every retail panic sell, it's all baked into that line. When price is below the moving average, it means the consensus over those 3 weeks was bearish. More sellers than buyers, more downward pressure than upward. But when price breaks above it, that consensus shifts. The momentum that built over 3 weeks of selling reverses into 3 weeks of buying. That's what breakout signals. Van de Poppe's emphasis on the 20-day MA break isn't arbitrary. It's because he knows moving average breaks separate the bounces that lead somewhere from the bounces that lead nowhere. Here's what nobody wants to admit. Most breakouts fail. Not most attempts. Most actual breakouts. After price breaks above resistance, studies show approximately 60 to 70% of those moves get rejected back below the level within days or weeks. Why? Because a lot of traders see the break and pile in thinking the move is guaranteed. They buy aggressively. Price spikes. Then the original buyers who waited for the break, the institutional capital that actually initiated it, they take profits. Price sells off. Suddenly that breakout is a fake. This happens constantly. And, honestly, most traders don't know it's happening until it's too late. The difference between a real breakout and a fake breakout is volume. Real breakouts have volume increasing progressively as price pushes higher. On the other hand, fake breakouts have a sudden spike in price on low volume, then volume just dries up. So, SEI bouncing from 11.22 cents is honestly a positive sign. But, just to be clear, that doesn't mean 16 cents is guaranteed. What it really means is that SEI is now testing whether it actually has enough momentum to break above the 20-day moving average. If it breaks with real volume, meaning, there's a lot of capital flowing into the asset, not just a handful of buyers nudging the price up, then the move has real legitimacy. But if it breaks on low volume, that's, a red flag. That basically means you're seeing retail FOMO, not institutional accumulation. And, here's the thing. Retail FOMO gets crushed every single time the market corrects. The 16-cent target that Van de Poppe mentioned is absolutely real. It's based on technical projections and those resistance zones. But honestly, that target only matters if SEI actually confirms the breakout. And just so you know, confirmation requires 3 things. First, price has to close above the 20-day moving average, not just touch it intraday. Closing above is commitment, touching is just testing. Second, volume has to increase on that close. You need to see trading activity spike alongside price movement. Without volume, the move is suspect. Third, price has to hold above the moving average for multiple days. The first test of a broken resistance often gets rejected. Real breakouts hold. If SEI does all 3 of those things, 16 cents becomes probable. If it only does 1 or 2, that's when traders get trapped. So, right now, if you're watching SEI's bounce and you're trying to figure out what to do, go ahead and like this video and subscribe. Because, honestly, the difference between traders who profit from breakouts and traders who get destroyed by them is this exact knowledge. We're covering specific technical requirements here, not just price guesses. And hey, turn on notifications so you catch when SEI actually confirms these levels. The psychology behind the 16-cent target. Well, the 16-cent target isn't arbitrary. It's actually calculated from specific technical projections. When price bounces from a support level, the first resistance target forms at a distance that's typically equal to the bounce depth. SEI bounced from support, and the distance to 16 cents represents that proportional move. But here's what really matters. 16 cents is only reached if momentum actually sustains. And, momentum doesn't just keep going automatically. It needs fresh buying pressure at those higher prices. This is where psychology really comes into play. When traders see a price moving up, some folks get excited and jump in to buy. Others, though, get nervous and end up selling into the strength. It's a constant battle. As long as fresh buyers outnumber sellers, the price moves higher. But the moment sellers outnumber buyers, yeah, that's when momentum dies. Price either consolidates or even reverses. The key inflection point here is the 20-day moving average. It's sitting right between where SEI is now and that 16-cent mark. Breaking it signals that momentum is shifting toward the buyers. But if price breaks it and then immediately drops back below, that really signals momentum failed. Sellers won, and the breakout attempt was, well, fake. And Poppe knows all of this. That's exactly why he emphasized the break. It's not just a line on a chart. It's the psychological barrier that determines whether this move has legs or not. Now, what happens if SEI breaks the 20-day moving average but, just doesn't hold? This is really the danger zone. Price climbs above the moving average, breaking through the level that lots of traders have been watching. The break looks confirmed. So, more traders buy, thinking they're catching an early move. Price spikes even higher, drawing in more retail FOMO buyers. Then, the original buyers, the ones who initiated the break, they take profits. Price sells off hard, and suddenly all those new buyers are underwater. They panic sell. Cascade selling happens. Price doesn't just drop below the 20-day moving average, it drops well below it, searching for new support. This happens constantly in crypto. And honestly, it's why most traders blow up accounts. The traders who survive learn to wait for confirmation. They see the break attempt. They don't buy immediately. They wait for volume confirmation. They wait for price to hold. They wait for multiple tests of the level. By the time they buy, the explosive move is already 30 to 40% along, but they're buying with confirmation instead of hope. And that confirmation really is the difference between the winners and the liquidated. So, here's the most likely scenario for SEI right now: consolidation. Consolidation means the price just stays in a range, bouncing between support and the 20-day moving average, while volume, gradually increases and positioning shifts around. It's boring. It's not exciting. Retail traders really hate it. But, honestly, consolidation is how real moves actually build. Institutional traders use these consolidation periods to accumulate. They buy slowly and quietly, without really moving the price. They definitely don't want to trigger any fast moves that could attract retail traders. What they really want is to build large positions before the price finally breaks out. So, during consolidation, price doesn't really go anywhere. But, the internal structure actually changes, supply decreases, demand increases, and positioning shifts. It's like the spring gets compressed tighter. Then, when enough accumulation has occurred, the move finally happens. And, honestly, it happens fast because lots of capital is already positioned for it. This is what Van de Poppe likely sees in SEI. Not an immediate breakout, but the setup for one. It's all about the foundation building, the momentum preparation. If SEI enters a consolidation phase around these levels, that's actually bullish long term. It means, institutions are loading up. It means the setup is becoming real. But it also means retail traders waiting for immediate moves to 16 cents are going to get frustrated and sell. And that frustration selling, that's what institutions want. That's when they accumulate most aggressively. So the 16-cent target might not happen next week or next month. It might take consolidation, weeks of honestly boring sideways price action before the actual move happens. But when it does happen after that consolidation, it'll be backed by real accumulated capital. And those moves don't stop at first targets, they run harder. If you understand that boring consolidation is more valuable than exciting bounces, hit subscribe right now. Because honestly, most traders are just looking for those instant moves, but we're tracking the actual market structure here. And, let's be real, structure beats hope every single time. So if you're trading SEI, or even just considering it, here's what actually matters. Don't watch the price every day. And seriously, stop checking if it hit 16 cents yet. That's just emotional trading. That's FOMO. That's the mindset that destroys accounts. Instead, watch 3 specific things. First, does SEI establish a consolidation range or break immediately? If it consolidates, bouncing between 0.1122 and the 20-day moving average repeatedly, that's setup building. Stay patient. Don't buy yet. Wait for confirmation. If it breaks immediately on high volume and holds for multiple days, that's different. That's real momentum. Second, watch volume patterns. Consolidation should show gradually increasing volume. Breakouts should show volume spikes. Fake breaks show volume drying up after the initial spike. Watch the volume bars. They tell the truth. Third, watch how price reacts to resistance tests. Real breakouts hold. fake ones don't. If SEI breaks the 20-day moving average and immediately gets rejected, that's all you need to know. The breakout failed, don't buy it, wait for the next setup. These three things, consolidation pattern, volume progression, and resistance hold, they determine everything. They're the actual signals, not price predictions, not analyst targets, the market structure itself. So, here's the real talk on SEI. The bounce from 0.1122 is real. The consolidation is building. The 20-day moving average is the breakout test, and 16 cents is the realistic first target if confirmation happens. But that's a lot of ifs. And, honestly, most of those ifs don't work out. Because most breakouts fail. Most traders buy hope instead of confirmation, and most who buy hope get liquidated. Van de Poppe's analysis is credible because he understands these dynamics. He's not predicting 16 cents will happen tomorrow. He's identifying where the next move could happen if conditions align. Your job isn't to predict. Your job is to wait for confirmation. Watch the consolidation. Watch the volume. Watch how price holds resistance. When all three signals align, that's when the trade becomes real. SEI might reach 16 cents. Probably will eventually, but it'll reach it through consolidation first, through boring sideways price action, through the kind of movement that frustrates most retail traders so badly they sell. That frustration selling is the fuel for the real move. That's when institutions capitalize. That's when breakouts actually work. Before you go, check out my other videos on how to identify real consolidation patterns, how to read volume confirmation signals, and why most traders fail at breakout trading. I've linked them in the description and they're showing in your suggested videos right now. Thanks for watching TJ Crypto World. Trade with patience, wait for confirmation, and I'll see you in the next breakdown.